conference group. Please enter your passcode followed by the pound key.
Good afternoon. This is Rajboro at the Public Service Commission staff. Waiting for the meeting to start. Chairman will start it. Please put your phones on mute. Thank you. No, I have hit the mute. I've hit the wrong red button and disconnected.
Disconnected.
Even the volume. All right, you tell me if you need more.
Thank you, Raj.
I'm cold.
How are you doing?
But hey, I got a jacket on, so if you're...
No, I'm good. I'm good.
The Suez settlement's gonna be on the second June meeting.
17. Correct, yes.
Community gas.
Yeah. I'm going to remind Tom tomorrow to send the stuff back to the, we've got an extension until tomorrow from Erica.
Oh, yeah. I said, don't give him no more. Can't do it. Can't do it.
8 o'clock in the morning.
He's running right up to the deadline.
Yeah. He asked the wrong question to her. He asked her, like, is there a deadline? Is tomorrow okay? I said, oh, okay.
Well, hey, he gave it to Matt, never gave it to nobody else. Good thing I seen it. It's like, Matt, what are you gonna do?
Is anybody there?
Tim, get us. Yes.
I think we're all here.
Yes.
Go ahead, Mr.
Afternoon,
Chairman. It's 1
Chairman.
o'clock.
Commissioner Correa? Are you
I
on
believe
mute, Commissioner Correa?
He's here, but I bet he's on mute.
I am here.
Commissioner Conaway?
Here.
Commissioner Drexler?
Here.
Commissioner Gray?
Here.
Commissioner Correa?
Here.
Okay, everyone, welcome to the Public Service Commission meeting of May 13th. We have the reading of the meeting minutes of April 22nd. Does any commissioner wish to make any corrections, additions, subtractions from those meeting minutes? May we have a
Commissioner Gray moves that the minutes be adopted as submitted.
I
Commissioner Conway
seconded
second.
Commissioner Karia.
Commissioner Conaway seconded. Is there any discussion on the motion? Hearing none, all those in favor signify by saying aye. Aye.
Aye.
Aye.
Aye.
Aye.
The motion carries. The consent agenda, any commissioner wish to have a article on the consent agenda taken off and put on a regular agenda?
This is Commissioner Drexler. I move we approve the consent agenda as presented.
I seconded. This is Commissioner Karia.
Is there any discussion on the motion to approve the consent agenda? Hearing no more discussion, all those in favor signify by saying aye. Aye.
Aye.
Aye.
Aye.
Commissioner Correa, did you say aye?
Yes, I did. Yes. Yeah. Yes.
Okay. The motion carries. On the regular agenda, number 5 is canceled or removed inasmuch as that's not right for discussion, and we also have it on the next commission meeting calendar. Number 1, in the matter of the application of Chesapeake Utilities Corporation for authority to establish a regulatory asset. We have proposed order 9592, and I believe we have Is Ms. Orr going to be presenting this?
Yes, thank you, Chair Winslow and Commissioners. Lindsay Orr on behalf of Chesapeake Utilities. You have in front of you Order Number 9592, which will open the docket for Chesapeake's application for authority to establish a regulatory asset to reflect any gains or losses incurred as a result of the termination of the company's defined benefit pension plan and to amortize any gains or losses over the remaining life of the plan. Chesapeake thanks staff for preparing the opening order and allowing Chesapeake the opportunity to comment. Chesapeake's requested edits have been incorporated into the version before you today, and therefore Chesapeake respectfully requests the Commission approve Order Number 9592. Thank you.
Thank you, Ms. Orr. Ms. Iori?
Yes, Chairman Winslow, thank you. The public advocate supports the proposed form of order.
Is the staff, who's representing staff on this matter?
Chairman Winslow, Tom Walsh here on behalf of staff. Ms. Orr's recitation is accurate. We did circulate this proposed order among the parties, and staff is in agreement and ask the Commission's approval thereof. Thank you.
Thank you, sir. Commissioner Gray?
Yes, Mr. Chair.
Do you have a motion to make?
Well, I have two questions, Mr. Chair. I was curious why you were calling on.
Yes, your question.
I virtually raised my hand. I'm trying to figure out how you knew that, sir. I do have two questions for Ms. Orr or her representatives. One, is this pension liability being transferred to the Pension Guarantee Board, or is the liability still residing with Chesapeake Utilities?
Commissioner Gray, I'm going to ask if, I believe Marie Kozel may be on the line. Would you be able to address that question, Marie?
Hi, Lindsay. It's Marie Kozel. It is my understanding, Commissioner Gray, that it will still reside with Chesapeake.
Okay, thank you. And one further question. Will the current defined benefit pensioners receive lower amounts due to the closure of this plan?
Commissioner
no,
Gray?
Yes, Mr. Chair.
Yeah, this is an opening order, and they may not be prepared to answer all these questions on the merits. So just sort of forewarning you.
Okay, so I yield and will hold this question until further details come forward before the Commission. No further questions.
Mr. Chairman,
Sure.
It's Marie Kozel and Commissioner Gray. No, they will not receive a reduced payout. They'll receive a full payout with no reduction in their benefits.
Okay, fine. So I'm prepared, Mr. Chair, to move that order number 9592 be adopted as submitted.
This is
Commissioner
Commissioner
Kaya,
Drexler. I second.
I second it.
Commissioner Drexler seconded it. Is there any discussion on the motion? Hearing none, all those in favor signify by saying aye. Aye.
Aye.
Aye.
Aye.
The motion carries. Thank you, Ms. Orr and Ms. Iori.
Thank
Number
you.
2 is in the matter of the provision of renewable energy portfolio standards compliance charge to retail consumers in the service territory of Delaware Power and Light Company. Wow. Proposed order number 9576. Ms. Kurtz-Crompton?
Yes, thank you. Good afternoon, Chair Winslow and Commissioners. This is Dawn Kurtz-Crompton on behalf of Delmarva Power. You have in front of you today for your consideration Order 9576, which would open the docket for Delmarva's 2020 Renewable Energy Portfolio Standards Compliance Charge Filing and would approve the tariff rates set forth therein on a temporary basis and subject to refund following review and final approval by the Commission. I thank staff for preparing the proposed order and allowing the opportunity for comment. Delmarva is in agreement with the form of order you have in front of you today, and I respectfully request that the Commission approve Order 9576 as submitted. Thank you.
Thank you, Ms. Kurtz-Crompton. Mr. O'Brien?
Thank you, Chair Winslow and Commissioners. This is Bill O'Brien on behalf of staff. Staff agrees with Ms. Kurtz-Crompton's summary of the order, and we do ask that the Commission enter proposed order 9576 today. Thank you.
Thank you, Mr. O'Brien. Ms. Iori.
Thank you, Chairman Winslow and Commissioners. If it pleases the Commission, Mr. Slater has a few questions that he would like to ask.
Yes, ma'am. Go ahead, please, Mr. Slater.
Thank you, Mr. Chairman and Commissioners. I just have really one question for Delmarva. Obviously, we see a very large increase, whether it's 26% or I think it initially started at 31%. Can you explain the increase, and is this part of an anomaly? Was last year an anomaly with the decrease? Thank you.
Yes, this is Dawn Kurtz-Crompton. We did initially file an RPS rate calculation on May 30th, and we later amended our RPS rate calculation in part due to the PSC's approval of Order 9578 and Docket 56, and we correspondingly adjusted the forecasted solar and wind compliance costs to reflect the reduced amount of 26%. With regard to your question concerning the anomalous nature, it is helpful to provide a little bit of context. This is, for this year, we are filing for the 2021 compliance year. Last year's rate, which was the 1920 compliance rate, was a bit on the lower side because it reflected an over-recovery from the 2018-2019 compliance year. So we saw essentially a rate in 18-19 that was normalized. We saw a dip that was an over-recovery. Last year was an under-recovery, so this year appears to be a higher rate because of that. As noted in our filing, there were three main drivers for the increased projected cost. First is that the net energy costs of the wind PPA contracts are rising due to the forecast reduction in the market value of energy produced, and lower proceeds from energy sold in turn reduces the offset to the cost of RPS obligation compliance. As I mentioned, there was also this significant credit for over-collections in the 2019-2020 rate. So that swing this is kind of adjusting for that under-recovery, that over-recovery from 18-19. And then thirdly, the spot price forecasts for both RECs and SRECs have increased year over year. This information is included in our filing as well, in part. So if you'd like to refer back to that, Mr. Slater, that information is available there as well. I just would also like to note that the 2-year increase from June 2018 to June 2020 is in line with the legislated increase of the RPS percent obligation. Did you have any other further questions for me, Mr. Slater?
No, thank you very much.
Commissioners, do you have any questions of the parties? Ms. Iori, I apologize. Did you have something else to present?
No, I was just going to say that the public advocate supports the proposed form of order. Thank you.
Thank you, Ms. Iori. Commissioners, any questions?
Commissioner Conaway moves that proposed order 9576 be adopted as presented.
Commissioner Caria seconds it.
Is there any discussion on the motion to approve the proposed order? Hearing none, all those in favor signify by saying aye. Aye.
Aye.
Aye.
Aye.
The motion carries. Number 3 is in the matter of the application of Delaware Power and Light Company for an increase in electric base rates and miscellaneous tariff changes. I have Mr. Geddes as being a person to lead this discussion off.
Thank you, Mr. Chairman, members of the Commission. This is an order that reflects the Commission's deliberations on April 22nd. and I believe that it properly reflects those deliberations. It has been commented on by Delmarva and the public advocate. Those comments are included in the order. Staff supports the form of order as a proper representation of the Commission's deliberations and asks for your favorable consideration of it. Thank you.
Thank you, Mr. Geddes. Is Mr. Skaggs on the phone?
Good afternoon, Chairman Winslow and Commissioners. R.J. Skaggs of Morris Nichols Arston Tunnel here on behalf of Delmarva on this item. Yes, the form of order was prepared by staff. We appreciate their efforts on that, and there were communications about it. And the result of proposed order 9546 before the Commission today is a form of order that is acceptable to Delmarva, and Delmarva agrees to entry of it. Thank you.
Thank you, Mr. Skaggs. Ms. Iori?
Thank you, Chairman Winslow and Commissioners. The public advocate did have an opportunity to review and comment on the order, and our comments have been incorporated in the proposed form of order, and we support it. Thank you.
Thank you, Ms. Iori. You know, it's sort of interesting on these teleconferences. I was watching CNN either yesterday or the day before when they had the Senate conference. I guess it was yesterday. And I could hear a dog barking in the background, some senator's house. And today we seem to have somebody who's out in the countryside, because I think I hear birds tweeting in the background. The bottom line is if you don't have your phone on mute, just double check and put it on mute. We like the sounds of nature, but even Ms. Iori may have had a little difficulty on that presentation. Commissioners, any questions on proposed order number 9546?
This is Commissioner Drexler. Move we approve proposed order number 9546 as presented.
Commissioner Gray, second.
Any discussion on the motion? Hearing none, all those in favor signify by saying aye. Aye.
Aye.
Aye.
Aye.
Aye.
The motion carries. Thank you, Mr. Skaggs and Mr. Geddes and Ms. Iori. Number 4 is in the matter of the state of emergency for the state of Delaware due to a public health threat. And we have staff's motion, Mr. Walsh.
Thank you, Chairman and Commissioners. Tom Walsh on behalf of staff. Staff respectfully requests that the Commission approve proposed order 9588, which would authorize the Commission-regulated public utilities to establish a regulatory asset for COVID-19 related incremental cost. And in support, staff submits as follows. As the Commission and parties are aware, on March 12th, Governor Carney issued an executive order declaring a state of emergency for Delaware, which is necessary to control and prevent the spread of the COVID-19. On March 16th, Governor issued the 6th modification to that executive order, which was in recognition of a provision of certain public utilities having to personally visit premises, interact with customers, those things which would interfere with social distancing mandates. And I will not verbatim repeat what is in the motion. I know it is before the Commissioners and all the parties. The 6th modification includes a prohibition against termination of residential services, assessing of fees, and it further defines residential service providers. It also, the 6th modification, states that this Commission has, I will quote, the authority to enforce and carry out the Section D against all residential service providers using its penalty authority under 26 Adult Code Section 217. Now, first note that the sixth modification provides that authority, but it is in no way a restriction of this commission's authority under Section 201 of Page 26, that the commission shall have exclusive original supervision and regulation of all public utilities and also of their rates, et cetera. So I just want to clarify that that is not a restriction of any other commission authority or discretion. As stated in the motion, just by way of brief background, on April 20th, staff conducted a teleconference, including, of course, Delmarva, Public Advocate's Office, Artesian, Chesapeake, Suez, and Tidewater. And that discussion concerned the request that is before you today. And there was no consensus as to which party would initiate the filing, aside from the obvious fact that it would not be the DPA. So staff filed this motion simply as a matter of furthering the policy of balancing fairness to the ratepayers in receiving safe, reliable, and affordable utility services while permitting utilities to recover just and reasonable rates, which is, of course, Commission's stated policy, although I paraphrase. And that was the basis for staff's filing this motion. Now, this motion is, I'll stress from the beginning, the obvious. It is an order authorizing creation of a regulatory asset of COVID-19 related costs. It is not authority beyond an accounting order. Now, it's appropriate because this current catastrophic condition, health emergency that everyone is facing, people, utilities, this is outside of the utilities' control, of course, and it is a non-recurring event. Those are two linchpin terms which are often heard in these regulatory asset matters. And I think it's also important to note that the Commission's discretion is called in to consider that fact and the underlying premise, which is not to be argued, that we don't know what we don't know. I think that is a given. Now, I also stress that this motion and the proposed order that staff submitted, this is not endeavoring to favor the utilities or the ratepayers. Rather, the goal is to ensure that during this state of emergency, due to this pandemic, consumers are protected from COVID-19 related costs being placed in a rate case later, where those costs and offsets could have been transparent by way of the requested quarterly reports that are in the order, which I'll address in a minute. Likewise, the utilities are given the authority, not a mandate, just the authority to establish a regulatory asset of cost and offsets. And the order states, as a further guardrail, that, quote, in order for costs to be eligible for inclusion in a utility's COVID-19 designated regulatory asset, the utility shall record and maintain details in the manner provided herein, of any and all assistance or benefit received, regardless of form and whether contingent or unmatured, including but not limited to suspension of disconnections or other activities, and income received pursuant to the U.S. Department of Treasury's administration of the CARES Act, that's all caps, C-A-R-E-S, or similar future federal funds in connection with COVID-19 that could offset any COVID-19 related costs. I stress that because this is an all-inclusive and to be evolving circumstance, which will be memorialized in these quarterly reports. And those quarterly reports, of course, then give staff and DPA the ability to seek further information as to the costs and offsets provided therein, or maybe there's something staff or DPA might see as not stated in a quarterly report that should be or it should be identified in the cost or the offsets. So this entire regulatory asset has to have some flexibility. It's just an unprecedented circumstance, and flexibility is required. Also note, as to the utilities, that this regulatory asset, if established, would only be considered in a future rate case. And it is expressly stated in the order that it will not be considered in a current rate case nor before the expiration of 6 months following the end of the time period. Now, that's a capitalized term, and staff has proposed in the order that the time period, the appropriate start and stop times would be beginning March 24th, 2020, which is the date of the sixth modification, and ending on the date which Governor Carney issues an order lifting the state of emergency. Now, the order I will go through just briefly because I think it further clarifies a couple of things that I've mentioned that form the basis for authorizing this regulatory asset. But it also addresses what I'm sure will be some arguments against the regulatory asset. And I think these ordering paragraphs essentially foreclose those arguments because they are addressed right here. The first ordering paragraph, of course, authorizes the regulatory asset capture COVID-19 related incremental costs during the time period. And again, that starts March 24th, ends on the date which the governor issues declaration declaring that state of emergency has ended. Second ordering paragraph concerns the quarterly reports, okay? And this is a requirement for a utility to be eligible to have that regulatory asset considered in a rate case. And I think that's important. And here we're striving for that balancing. We want information, transparency, and I don't believe that any of the utilities have any issue with that. I'd like to think everybody's looking to play by the rules here. So the quarterly reports, it will have to include, of course, costs incurred and offsets and a verification of the utility's authorized representative. First report would be due August 1st for the period ending June 30th, 2020. And then each subsequent quarterly report would be filed no later than 30 days after the end of the calendar quarter. Then staff and DPA, as I mentioned, can seek further information from the utilities as to those quarterly reports. And utilities shall serve and file in this document verified responses within 20 days following receipt of such requests. Again, this goes to the balancing in the event a regulatory asset is established. And again, there is no guarantee here. The utilities know that, DPA knows that, anyone who's worked with these regulatory assets knows that. It's an accounting order, and it will be assessed and determined in a later rate case. There is no sorry, you have to pardon me. I just got a disconnect, but I'm back on. There is no guarantee as to whether the costs are recoverable, the appropriate period of recovery of any approved amount of the regulatory asset, or any amount of carrying costs attributable to those costs. So this is, by necessity, a bit of an open book, but we've carefully put parameters here which I think serve both the ratepayers and the utilities equally. This was after much work among staff, and we believe that this strikes the best balance. And again, when those determinations, if they are made with regard to this regulatory asset, it's not to be made in any pending rate case, nor, and this is in order in paragraph 2, nor before the expiration of 6 months following the end of the time period. And that's critical because the incremental costs are not fully known and ascertainable at this time. And we've also included in paragraph number 4, if due to the state of emergency, the utility finds it necessary to further deviate from its tariff, any applicable statute, regulation, or commission rules, the utility shall file its request to deviate in this docket. Again, just furthers transparency and protection on all sides. Any additional requests related to this order, regulatory asset, will be filed in this docket. With that, I believe that this serves the purpose in minimizing the potentially adverse financial impacts on the utilities, as well as protecting the ratepayers, and therefore the Commission should authorize the proposed order 9588, and I would respectfully request that I be permitted to respond to any presentation from the other parties as to the terms of the order. Thank you.
Thank you, Mr. Walsh. Ms. Iori?
Thank you, Chairman Winslow and Commissioners. With your indulgence, Mr. Slater is going to take the bulk of the argument. After he is finished, if the Commission allows, I just want to hit one legal issue that the motion and proposed form of our order raises.
Yes, ma'am, go ahead.
Thank you, Chair Winslow.
Thank you, Mr. Chairman and Commissioners. I understand there are two orders before you, and I'll tell you that I feel a bit ganged up because I know that all the utilities are going to be commenting after I'm done. However, I will continue on and speak on behalf of Main Street, which is the customers of each of these utilities. There is a total and utter disconnect from Wall Street to Main Street. Main Street is hurting, decimated. We have the highest unemployment ever recorded. In Delaware, there were more seeking unemployment in a 5-week period than in the past 23 months. The disconnect between Wall Street and Main Street is starkly demonstrated in the motions before you today. Wall Street, aka the utilities, are demanding that they be made whole for COVID-19 costs, even though one of the same utilities appearing before you today to ask you for this extraordinary relief told its shareholders that the costs were, quote, immaterial. How did we get here? Well, let me tell you. On Monday, April 20th, as Mr. Walsh said, staff organized a call for the parties to discuss COVID-19 and staff's motion for regulatory asset treatment. Keep in mind that the costs for which they're seeking regulatory asset treatment are costs that, in a rate case, are normalized over a certain number of years. The first and only question asked by staff was whether utilities wanted such treatment. It should surprise no one that they jumped at dollar-for-dollar recovery with a possible return. After which, I was able to ask substantive questions. And I asked what incremental costs utilities had seen to this point, which future costs they projected, if they would forgo a return on those costs, what financial harm they've seen, and other questions. Only 2 utilities of the 5 on the call responded. Another utility responded to proceeded to chastise me for asking questions stating that this call was not the time for that. At the behest of Dr. Brill, I followed up and asked questions of the utilities to better understand the issue. After receiving staff's draft motion, I followed up with questions to all the utilities on April 29th. Those questions were, what incremental costs have the utilities seen to date due to COVID-19? What are some examples of incremental costs seen or projected due to COVID-19? How will the incurrence of these costs harm the utility's financial integrity? And what cost reduction measures have the utilities taken? Have you limited discretionary spending to only that necessary to maintain safe and adequate service? Suez reached out immediately, and we discussed the cost that they're seeing and potential future costs. Delmarva Power responded the following week with some responses, and Chesapeake responded this morning. Artesian and Tidewater provided no response at all. We know little to nothing about the incremental costs that they have incurred, project to incur, or how this may affect their financial integrity. What we do know is what these same utilities have told their shareholders. There's a 13-page transcript of Chesapeake's most recent earnings call on May 6th. It's provided nothing to the Commission, their staff, or the GPA. They told their shareholders that they have not experienced a steep revenue decrease, that they don't see any delays in their capital investments, and tout being one of the first utilities in the country and to halt disconnects and waive late fees. They aren't telling their shareholders that COVID-19 will impair their financial integrity. They told their shareholders, and I quote, the COVID-19 impact on the company was immaterial. Immaterial. Artesian said net income increased 13.5%, with water sales increasing 2.5% higher. They didn't tell their shareholders that COVID could result in harm to their financial integrity. Tidewater showed net increase of 17%. They continue to move forward with capital projects and announce dividend payments as well. They didn't tell their shareholders that they expected any harm to their financial integrity. Exelon said, and I quote, there is no material impact to Exelon's financial statements for the first quarter of 2020 due to COVID-19. They continued on stating, Exelon identified and is pursuing approximately $250 million in cost savings across its operating companies. When I asked Delmarva about savings measures, they said work hasn't decreased and mentioned status quo. Again, no financial harm here either. Let's not forget that impairment of the utility's financial integrity is the primary requirement for seeking such extraordinary rate-making treatment. I suspect that Artesian and Tidewater chose not to respond to my questions because they know their answers will demonstrate that not recovering these costs won't rise to the level of harming their financial integrity. And they believe you'll give them this release anyway without having to answer any questions or provide any data. One of those utilities that never responded is the one that took offense to my asking questions on the first and only phone call. I guess I should have proceeded anyway. Let's address what we did receive. Suez has purchased some foggers, very inexpensive products, a couple $100. They have some uncollectibles and late fees that have accrued, but they didn't know that they received any additional customer calls due to COVID-19, and I appreciate their candor. Chesapeake responded this morning. They point to PPE, IT costs, non-shared vehicles, increased payroll, I don't really know what that's about, and potential bad debt, which they say is a delayed cost rather than immediate. IT costs and vehicles are already recovered in their rates. They, like each utility, provide no cost or offset data to the DPA or this commission. They're truly asking for a blank check. They went on to lecture me about fair rate of return, stating that any inability to recover those prudently, we don't have prudence in Delaware as a reminder, incurred incremental costs in Delaware harms the financial integrity of the company. They provide no cost savings measures. In fact, the utility we received a response from said that they see the status quo. Status quo does not necessitate extraordinary treatment. Again, they provide no cost savings measures, and staff's motion doesn't outline specific savings measures either. Again, this is the same company that told its shareholders that COVID-19 costs were immaterial. They're trying to tell you something entirely different while providing you with literally no data. So you hand over blank checks for their shareholders. Delmarva responded to some incremental and forecasted costs are for PPE, increased feeder inspections, higher fleet costs, more frequent office cleanings, and higher bad debt expense. 2 Delmarva employees were observed last Thursday in the field not using any PPE, not practicing social distancing, and not wearing masks or gloves. And they apparently arrived together in the same truck because that's the only truck that was there. Additionally, Delmarva has not explained why any of these costs are not already included in their current rates or in the new rates they're seeking as a result of their pending rate case. To the extent that these costs are already being collected in rates, providing regulatory asset treatment could result in an overcollection, but the utilities won't hand that money back. Granting regulatory asset treatment will require staff in the DPA to basically conduct a forensic analysis of every penny to determine whether it was already being collected in rates. The utilities are claiming bad debt collection, but we've only just completed our first full month of billing, and no utilities provided any data to the commission outlining any emergency. You would think before approving such extraordinary treatment, you would receive some data. Let me tell you about Delmarva's bad debt collection. It is a mess. It is completely subjective, and I think there's actually fundamental problems in their billing system. For example, they allow customers to start service and pay nothing for 5 months with no late fees or service terminations. I have a customer right now that literally went an entire year without a single payment, no disconnection. This would suggest that there is no need for extraordinary rate-making treatment. I asked all the utilities the amount of late payment fees and other penalties set aside. No utility has been able to provide this information, yet they're asking for special treatment. I asked how many disconnections were delayed. Same response, but they're asking for special treatment. In addition, 4 of the 5 utilities, Exelon, Artesian, Chesapeake, and Tidewater, have declared recent dividend payments. It was difficult to find information on Suez. If the utilities are strapped for cash and there's no insinuation that their financial integrity is in question, they should look at what other companies are doing. They're cutting the salaries of their presidents and CEOs, and they're not handing out dividends. The utilities certainly aren't crying poor to their shareholders. They're telling them that the costs are immaterial and handing out 8.6% increases in dividends. This certainly suggests that they are not being financially harmed. But you know who is being harmed. It's the ratepayers, and it's Main Street. The more than 84,000 Delawareans that have filed for unemployment in less than 2 months. The small businesses that closed their doors to the virus who may never open again. And while there's assistance being provided by the federal government in the form of stimulus funding and loans for small businesses, it may not be enough. These small businesses and individuals are not and may never be made whole. The utilities don't have that same risk, or in fact, much risk at all. They demand to be made whole without providing you one shred of evidence to back up their claim as to the necessity of a regulatory asset, since again, they're telling their shareholders their financial integrity is not in question. In order to approve regulatory asset treatment, this commission must find that the utility's financial integrity will be harmed without the regulatory asset relief. You've been told that this is just a deferral of potential later recovery, and the commission doesn't have to approve the recovery later. But the fact is that in order for a utility to defer costs, the commission must find that it's likely that the utility will be able to recover the cost being deferred. And this commission has previously recognized that once the determination has been made, it's very difficult to go back and reject recovery. If you approve the relief being requested here, the reality is that you're approving dollar for dollar recovery of those costs and likely a return. Under FASBA, the commission has to find, again, that it's likely the cost will be.
Drew?
You're muted, Lori.
Under FESBA, that's where I was.
Gina, can you tell Drew, excuse me, this is Raj Bora, we're going off the record. Gina, can you tell Drew we can't hear him? We lost him at FASB. Hello?
Is it us?
Hey, Ronette, did the call drop? 15 minutes? Did you do? More than 15 minutes?
We got it scheduled for 220 minutes.
It dropped.
Is the commissioner still on?
Can you hear?
Nobody.
It cut out about 30 seconds ago.
Yeah.
Ooh. Can we read Donald?
We can hear you, fine.
Oh.
I think it's a matter of the state.
Hey, Drew, we lost you.
Yeah.
Gloria lost you at FASB.
Okay.
Okay,
So
we're back
under FASB.
Hold on, back on the record.
Sure. And I will provide this to Gloria as well.
Thank you, Drew.
Under FASB, the commission has to find that it's likely that the cost will be recovered. They say their financial integrity is harmed because the rating agencies have lowered the credit rating from stable to negative due to uncertainty that it could cause harm, but provide no data to show any current harm. In preparing for this meeting, I did some research and found that Delmarva Power has a stable credit rating. It seems they look nationally or regionally when it benefits them, but they forgot to look at themselves, which is stable. S&P also said the industry has levers. Depending on the severity of the recession, the industry has important levers that could mitigate some of the risks. These include reducing capital spending and dividends, neither of which any utility before you today has utilized. S&P continues, our analysis indicates that the majority of utilities could reduce their capital spending on a temporary basis by as much as 40% and maintain safe operations. Again, no utility has taken these savings measures. They mitigate nothing but suggest you need to provide this extraordinary treatment. The double talk should be ended in denying this petition. Exelon, the utility dive article from yesterday. The article mentions that Exelon would like you to hear, but it didn't include these comments from the shareholder call. They told shareholders the impact of COVID-19 does not change the fact that Exelon's fundamental business is strong and its strategy remains strong. That their utility rate base is growing 7% annually for the next 4 years, and in that time, they expect to have $13 billion, that's with a B, in rate base. nearly equivalent to adding a utility the size of ComEd. That is astounding. There's clearly no harm to their financial integrity when you're adding $13 billion worth of rate base equivalent to the size of ComEd. The same call said at the utilities, the $10 per share degradation from prior guidance can be split into a little over 5% for lower ROEs at ComEd due to the drop in the 30-year Treasury, and a little less than 5 cents for the record mild first quarter winter. As we typically do in rates, weather will be normalized. The same is true of bad debt. There was no insinuation on the call or on any other utility shareholder call that any of the costs per share were due to COVID-19. If you want to understand COVID-19's incremental cost on utilities, then open a working group. Chesapeake suggested to their shareholders that they're part of a working group in Delaware. I hope our one call wasn't the extent of our working group. You should know the issues before approving such extraordinary treatment. I implore you to deny this petition and tell Wall Street to listen to Main Street. It's about time their voices are considered ahead of shareholders since they pay the bills. But if you are swayed by the request, at the very least, add parameters. If you're going to allow deferral of costs, it should only be as prescribed by the sixth modification, which was actually on March 25th. Not the blank check that this motion has set before you. Set criteria for incremental cost. There's no criteria presented today to determine incremental cost. Incremental costs are costs that are incurred over and above the utility's normal cost of business. They should have to provide that these costs aren't already included in their revenue requirement. Do monthly reporting, not quarterly reporting. Say that there's no return on these costs. Say that utilities have to find ways to save costs. Stimulus money was the only envisioned by staff, but there could be other savings due to tax breaks, or utilities can agree to regulatory liability for savings above their incremental costs. You could forego dividends. You could reduce executive pay. You could reduce your discretionary spending. Again, you should deny this motion outright for all the reasons we've already stated here today. But if you don't, at least add the parameters and guardrails that I've just mentioned. I would now like to turn to Ms. Iori to address the proposed form of order from a legal perspective, if you'll indulge us for just a few more seconds. Thank you.
Thank you, Mr. Slater.
Thank you, Chairman Winslow and Commissioners. I only have one, and it's a small, well, I won't call it a small legal issue, and that is that staff's proposed form of order would have the regulatory asset start from March 24th, because that was the date of the sixth modification becoming effective. But that is inappropriate. That would, to stretch back to that, to anything before the date of this order, should you grant a regulatory asset, would be retroactive rate making. If you decide that you think it's appropriate, and for all the reasons that Mr. Slater explained, the public advocate does not think it's appropriate to create regulatory assets for this. But if you should decide that it is appropriate, then the start date of it would be the date of the order. It would not be going back to March 24th. Thank you.
Thank you, Ms. Iori. With respect to the draft order, is Ms. Kurtz-Crompton on the line to discuss that on behalf of Delmarva?
Good afternoon, Commissioner Chair Winslow. Thank you. This is Dawn Kurtz-Crompton on behalf of Delmarva. If it pleases the Commission, I would like to have Marisa Slayton, who is Delmarva's Director of Regulatory Strategy and Services, speak on behalf of Delmarva and some of the utilities for a portion of her comments.
Please proceed, Ms. Slayton.
Marisa, are you there?
Yes, sorry. I was still on mute. Good afternoon, Mr. Chairman and Commissioners. This is Marisa Slayton, and thank you for allowing me to speak this afternoon. Delmarva is supportive of staff's motion and only recommends some modifications to the order. Staff's motion is generally in line with orders that were passed by the Maryland Commission, DC Commission, Virginia Commission, and most recently today, the Pennsylvania Commission. Similar discussions are underway in New Jersey and are trending in a positive direction, leading towards a regulatory asset order as well. The 5 utilities in Delaware collectively submitted an alternate proposal to staff's draft order, which contains 3 modifications. 2 modifications are in the first paragraph, and 1 modification is in the third paragraph. Concerning the utilities proposal, it is to edit the paragraph, the first paragraph, to read that the regulatory asset be established for the period starting on March 24th and ending, and here's where we propose to strike on the date on and instead insert 30 days after. 30 days after which Governor Carney issues an order, declaration, or similar announcement that the state of emergency is no longer in effect. And rather than end the sentence there, we would extend the sentence to say, but may include additional costs resulting from the governor's executive order, such as prohibiting shutoffs and collections that may extend beyond this time period. This differs from staff because staff's language proposes that the time period for the regulatory asset end on the same day that the state of emergency expires. And that date is currently May 31st, but it could be extended by subsequent governor orders. The utilities would submit that staff's proposed time period is too short because the impact of COVID and the impact of the current suspension of late fees and disconnects won't be ascertainable and will necessarily extend well beyond the date of the state of emergency. For example, it will take time to restart the late payment and disconnect policies because the utilities will want to provide notice to customers that late payment fees and disconnects will restart and give them a chance to settle up. In addition, any fees that get applied will need to align with the billing period, which will be different for each customer. So for these reasons, among others, we believe that the time period for the regulatory asset should be 30 days after the expiration of the state of emergency. We believe this is a reasonable amount of time to restart the late payment and suspension policy. Although we may be able to get our customer policies back in place within 30 days, the total cost associated with the pandemic will take much longer to determine and confirm. Certain costs like bad debt expense will not be known for much, much longer. And that is why we're proposing the additional clause at the end of the sentence to allow costs that go beyond that 30-day time period to be included in the regulatory asset. It may take months to determine a customer's ability to pay. This will include working with customers and setting payment arrangements. And only after these attempts fail will the utilities know their uncollectible amount. By point of reference, the Maryland and Virginia commissions did not impose an expiration on the time period for the COVID regulatory assets. And the DC Commission imposed a restriction of 15 days after their state of emergency lists. But the regulatory asset treatment in DC is different than it is in Maryland and Virginia and in Delaware. And so therefore, even that 15-day restriction does not limit the ability for the utility to include bad debt within the regulatory asset. So related to paragraph 1, our request is for the commission to accept both modifications. But if the commission is unwilling to do so, we ask that you consider, at the very least, extending the time period to be 30 days after the emergency declaration is lifted. Concerning paragraph 3, this concerns the type of analysis that the commission will undertake when the regulatory asset comes to you for review. And the utilities agree with the concept that the regulatory asset cost should be reviewed within the context of a future rate case. Our proposed modification focuses on the accounting language that the utilities need to support a reg asset for GAAP financial reporting purposes. The proposal specifically replaces the phrase that the Commission will determine whether the costs are recoverable with the phrase that the Commission will determine the cost that will be recoverable. This proposed language is the same as you do in every rate case. All we've done is flip the words around so that the revised language more accurately reflects what kind of review the Commission will undertake. The Commission will determine the amount to be recovered. As originally drafted in staff's proposal, it leaves open for debate whether recovery is appropriate at all. And I don't think that that's the message that we're discussing today or intending to send. Commissions across the region like Maryland, DC, Virginia, Pennsylvania wouldn't have entered orders like they did in New Jersey actively considering it if there was a belief that future recovery of COVID costs is completely out of bounds. So respectfully, if the Commission is inclined to enter an order establishing a regulatory asset today, we request that the language is framed as, quote, determine the cost that will be recoverable, because it will help to support our accounting treatment of the regulatory asset under GAAP. I'd like to make a few additional comments on behalf of Delmarva only concerning some of the arguments that were raised by Mr. Slater, and then I would defer to the other companies to make their additional statements as well. And I'd like to start by saying that Delmarva believes that the actions taken by the governor through the 6th modification of the emergency declaration and the actions taken by Delmarva to support residential and commercial customers were the right thing to do, and that there's no disconnect between Main Street and Wall Street. The fact that we began suspending new late fees and shutoffs before being ordered to do so was the right decision and was supported by the governor, requiring all utilities to follow the same policy. Suspending disconnects and late fees supports the stay-at-home order by making it safer for people to remain at home with access to light and heat. Suspending the disconnect also supports at-home instruction and working from home, which relies heavily on access to technology. And it also supports the businesses that remain open, despite many of them seeing lower numbers in customers and revenue. Compared to other points in history, what we're seeing with the COVID pandemic is a drastic and quick onset, not a slow economic downturn. So it required quick action by the state and by the companies, and is therefore reasonable for the Commission to authorize a regulatory asset order. The advocate has argued that a regulatory asset in some way guarantees cost recovery and that the proposed order creates a blank check for the utilities. And this is not true, and the regulatory assets do not guarantee recovery. All of the costs are subject to challenge by staff and DPA, and ultimately the Commission review and approval. The language in the draft even specifically states that the Commission will review the regulatory asset costs in a future rate case. When we submit these costs in the rate case, they must pass the business judgment rule, and that's the same regulatory standard of review for every expenditure that the company makes. So while the advocate has gone through detail of comparing other states, for example, like Colorado, these arguments are arguments that should be made in a rate case. In addition, as Mr. Walsh noted in his opening remarks, the utilities are required to submit quarterly reports. Those reports will disclose the costs being tracked by Delmarva, and staff and the advocate will be permitted to question Delmarva about those reports. This will ensure that costs are being reasonably monitored. The advocate has also focused a lot on the amount of recovery, what types of costs to include, the method for calculating those incremental costs, and so forth. Again, these issues can and should be raised in a rate case when the company is seeking recovery. And establishing the reg asset does not restrict the DPA from raising these same arguments at a future date. These are arguments that every state that has authorized a reg asset will address in the future. And states like New Jersey, who are in discussions with utilities, will also have to address them after they issue such an order. And those orders, and including the one before you today, recognize the extraordinary impact of COVID and that the full measure of related costs will not be immediately known to the utility. I mention this so you don't find that the lack of cost detail at this state to be alarming or even of concern. To be sure, the COVID impact will have significant adverse impact on Delmarva's financial integrity. Incremental costs and revenue impacts at the company currently incurred and forecasted to continue include personal protection equipment such as masks and gloves, increased theater inspections on critical facilities. We're seeing lower commercial revenues and potentially lower residential revenues. We're seeing higher bad debt expense, just to name a few of the additional costs. The impact of these, along with the emergency declaration, will have a significant negative cash flow impact on the company, which the company believes it has adequate resources to address. The potential financial impact of the COVID epidemic on the utility industry has even raised concerns with the rating agencies, such as S&P, placed the entire North American utility industry on a negative outlook. So in closing, commissioners, and for all of those reasons, Delmarva respectfully requests that the commission deny DPA's motion and enter the alternate proposal proposed by the utilities with the modifications that I mentioned at the top of my comments. Thank you.
Thank you, Ms. Clayton. Ms. Crompton, do you have something further to say on the legal issues? For example, the starting date as argued by Ms. Iori?
Yes, Commissioner Winslow. This is Dawn Crompton for Delmarva. Thank you. I just wanted to respond to Ms. Iori's comments. And although we've not had an opportunity to look into this in depth, I understand that the PSC is entitled to exercise its authority and approve deferrals under the circumstances that have been presented to you today. The PSC has the authority to exercise their authority sparingly and when necessary, and that when the anticipated losses, such as the ones being contemplated with this regulatory asset, are both extraordinary and non-recurring, that this is an exception to the prohibition on any potential retroactive rate making. So while we may not agree with Ms. Iori's point, if the commission were to consider this to be retroactive rate making, the commission does have authority to allow these types of costs as an exception to that prohibition. I'm sorry?
I thought you were done. I'm sorry.
And,
Chairman Winslow, sorry, we're both talking at the same time. It's difficult when you're on the phone.
Ms. Iori, I just wanted to give the other utilities an opportunity, or Delmarva, if Marisa has anything further to say, or the other utilities had anything further to say on that topic as well.
Well, Chairman Winslow, if it's appropriate, I would like to respond to that argument because I think it conflates regulatory asset and retroactive rate making. They are two very different things. I do not, the public advocate is not taking issue with this commission's authority to permit the utilities to record a regulatory asset. We understand that the commission has the discretion to do that. We don't, as you've heard, we don't think you should, but that is not the same thing as retroactive rate making. Retroactive rate making is going beyond the commission will enter an order if it approves it that is dated today. Anything that goes before that is retroactive rate making. The commission may recall when the public advocate filed its motion to establish regulatory liabilities for the Tax Cut and Jobs Act costs, the income taxes that would be due back. We did not go back to the date that the act was signed. We couldn't. We didn't file our motion until February 1st, so we could only go back to that. We couldn't go back and get the months that had elapsed before that to get that money. So there's the difference. They are two separate things. And I just wanted to make sure that the commission understood that. Thank you.
Thank you, Ms. Irie. Is there anyone else representing a utility that wishes to be heard?
Yes, this is Dave Spake from Artesian Water.
Yes, sir. Mr. Spate, please proceed.
Okay, I'll try and keep my remarks brief because there's been some good presentation ahead of this, so I've tried to pare down what I wanted to say here, and I appreciate Delmarva for taking the charge for the utility group in offering up the proposed order and some of those remarks there as well. And I echo those remarks as well as hope for the approval of their slightly modified order. I do want to address, however, a couple of key points here that I know that Artesia is intimately familiar with. First, I'd like to appreciate staff's foresight in offering up this single resolution to an issue that cuts across all Delaware regulated utilities, not just the 5 that are represented in this group. We don't believe that this motion provides any one-sided recovery or giving the blank check. We think that the motion we believe the motion and proposed order balance those interests and the utilities by not authorizing recovery of specific costs associated with pandemic, but rather allowing deferral until such times as those costs can be evaluated in the context of the utility's next rate proceeding. It is at that point where parties to the request of which the DPA has displayed its very adept skill and tenacity at questioning the recoverability of all expenses, not just those that will be offered under the deferred treatment. But ultimately, it'll be up to the commission to deny or allow such costs and the time frame under which those costs would be recovered. And the key word throughout this, as everybody knows on this phone call, is opportunity. Nothing is guaranteed. Unless you're actually earning your rate of return, there's simply not the case that you're guaranteed dollar-for-dollar recovery. I think it was noted earlier that all of at least most of the states that surround Delaware, their staffs and or legislative body has already entered orders allowing for some sort of deferred regulatory treatment. Not all the same, but nevertheless, there is a show of this, that there is this extraordinary costs that are being borne for utilities that are providing essential services as electric and water and gas to make sure that people are safely in their homes and making sure that we get through this pandemic. I did want to focus on a few things, though. There's been a lot of discussion here, and the last point regarding precedents, what I will call precedents. Both Mr. Slater and Ms. Iori seem to suggest there is legal precedents out there for dire financial straits and the retroactive rate making. I want to reference 2 orders in 2 distinct cases that Artesian was personally involved with. One was under PSD docket 16-1001, order number 9125. And if I can, I'll just read a couple of passages. Order number 9125 stated, quote, "The Commission acknowledges that its precedents concerning the granting or denial of a regulatory asset treatment are not entirely consistent with each other," end quote. But went on to decide, quote, "The Commission finds that this change in policy regarding the circumstances that merit granting regulatory asset treatment is necessary and justifies to properly incentivize utilities to take actions in furtherance of the public good," end quote. And then further, quote, "We make no determination regarding whether those costs may in fact be recovered, the amount of those costs that may be recovered, or the period over which such costs may be recovered. Those issues may be addressed in Artesian's next proceeding for a change in rate." So in the end, all these findings, if not exactly the same as requested herein, at least in the same light, are in the same light and provides ample support for continuing that practice. In another case, and I'll reference PSC docket 14-132, order number 8816. This section goes specifically to whether or not an order should be in place to allow deferral. And in that decision and discussion, it says, it clearly indicates that utilities should have in place an appropriate order permitting deferral of expenses before actually having an ability to recover a deferred regulatory asset in rates. And that was in page 91, paragraph 227 of that discussion. And if you refer to the Delmarva case, as the DPA did in its response, it says, quote, as we stated there, allowing a utility to defer a cost for collection in future rates should be the exception, not the rule, should occur only when there exists a specific commission order allowing such deferral. The motion and order presented by PSC staff would clearly give utilities within this commission's jurisdiction the ability to defer costs until such time as those costs can be evaluated and included in each rate. This motion and order does not establish the veracity or recoverability of any cost deferred, but rather simply allows those for later determined adjudication. That's step one in any such consideration, according to the staff, DPA, and the decision rendered in that case. Clearly, the DPA is making the same reference in paragraph 6 of their response, saying any regulatory asset the commission grants would apply only to costs incurred after the date of approval, because it would be impermissible retroactive rate making. So on one hand, you're saying don't give them a deferred asset regulatory treatment. On the other hand, if you don't, then you can't recover these later on. Today is the start, and I will say it's been going on for some time, but most of these costs are just now starting to present themselves. Mr. Slater indicated earlier that on a phone call, he questioned utilities about those expenses and costs at that time. And rather than saying chastise, I would say he was informed of those sorts of costs that were going to be recovered, but we could not lay out the exact dollar amount. Those were the same across all utilities. Only now are we starting to see the increase in the bad debt, the increase in the receivables out there. We won't know the extent of those until further down the line. This order allows each company to take account of that and then make sure that while asking for recovery later on, it can support those costs and defer those costs under accounting treatment. Finally, the DPA's response to the motion and proposed order uses phrases throughout such as focuses only on your utility, recover every dollar of expense, blank check, made whole, potential double payment, and earn a profit on it. This motion and order does no such thing. Clearly, the motion indicates that this is not the Commission's approval of such recovery, but the allowance for deferral until the next rate application. It simply authorizes the utility to defer costs each company deems appropriate for cost recovery as it relates to the governor's executive order and additional costs associated with providing an essential service safely. The test of that recoverability is left for full review, testing, and adjudication at the time the company's next rate proceeding, at which time the DPA staff, as well as other parties, may investigate, judge, provide appropriate offsets to the recoverability of such deferred regulatory assets. Further, the DPA seems to suggest that utilities should show their need by discontinuing construction progress. This comment is in direct contrast to the governor's state of emergency orders, where construction is deemed an essential industry that is to continue despite the pandemic. Canceling or postponing projects at this point would only exacerbate unemployment. Also, deferring projects that are already underway would have the effect of making those projects more expensive by adding demobilization, remobilization, and other costs. Perhaps most importantly, though, is the fact that in reality, the projects would merely be postponed rather than canceled. Therefore, the incurrence of those capital costs would merely be a timing issue rather than a true savings that could offset expenses related to COVID. Finally, the DPA reaches even further to the editorial page of the News and Public Opinion when it states that paying executive incentive benefits is unnecessary to provide utility service, knowing full well those sorts of expenses are routinely, if not always, excluded from costs included in rates and therefore not germane to this discussion. Each utility is not only judged by the authority in this debate, but by a host of stakeholders, customers, shareholders, boards of directors, etc. Management must make appropriate decisions that protect the longevity of the utility and essential service to its customers, and in all cases are subject to the retrospective looking glass of all those authorities to which they are always accountable. PSC staff has brought forward an order to which we have requested the discrete modification, which provides an allowance for utilities to do what each utility needs to do in providing essential service that is safe and reliable. It does not, as the DPA suggests, provide a blank check. Artesian requests that you approve PSC's motion and proposed order as offered by the utility group. Thank you.
Mr. Spade, what's your position with respect to the starting date, March 24th or May 13th, the issue of retroactive rate making?
Our position is that the commission has the discretion to put that start date. I don't know that it would change Artesian's position with costs and VARs. Ours are going to be more looking forward in terms of bad debt, but we believe that you have that discretion as exhibited in our case in the emblem matter, where costs were incurred prior to the order setting those expenses as deferred in order number 9125. So we believe that there's precedence to suggest that you have that ability to do that. And being the attorney, that's the best I can do with that. Thank you.
Thank you, sir. Is there anyone else from any other utility present who wishes to make comments?
Yes.
Yes.
Commissioner. This is
Mr.
Bruce O'Connor from. No, this is Bruce O'Connor from Tidewater Utilities, Chairman.
Yes, sir. Go ahead, please.
Oh, thank you. So I had a 40-page response that was thoughtfully cut down because of the comments provided by Delmarva and Artesian, to which Tidewater agrees with the comments that they provided. The only thing that I would add, Chairman Winslow, is that Tidewater asked that the Commission consider allowance for some flexibility with respect to the time period for the calculation and tracking of COVID-19 related costs for the regulatory assets. Specifically, it remains unclear that all such costs will be known and measurable on the date Governor Carney lifts the current state of emergency. It also remains unclear whether utilities will be under an additional federal prohibition from terminating customer service and assessing late fees beyond the date of the rescission of the Delaware state of emergency. So given these uncertainties, and also for the fact that 95% of Tidewater's customers are billed on a quarterly basis versus most utilities bill on a monthly basis, the true impact of customers' abilities to pay or customers' willingness to pay won't be known until we're potentially into the early part of the summer. Tidewater respectfully requests that the Commission consider not tying the end date for COVID-19 related tracking to the date of the lifting of the current state of emergency. Those are my comments, Chairman Winslow, and I thank you.
Thank you, sir. Is there anyone else from the utility present?
Yes, thank you, Chair Winslow and Commissioners. Lindsay Orr on behalf of Chesapeake Utilities. Chesapeake would like to thank staff for bringing this motion and for engaging the utilities in the process. Chesapeake supports staff's motion in the alternative form of Order 9588 presented by the utilities for the reasons articulated by Delmarva and the other utilities, and thanks Delmarva for taking the lead with that presentation and to the other utilities for their thoughtful comments. I don't want to repeat what has already been said, so I will try to be brief, but I do want to highlight a few points. Our employees are working hard every day to ensure that Delawareans are receiving the service that they need during this catastrophic health emergency. And Chesapeake is continually changing its operations to ensure that we are in full compliance with the governor's mandates. A regulatory asset will allow public utilities in Delaware, like those in Maryland, DC, Virginia, and Pennsylvania, to account for the costs of compliance with the governor's mandates while the crisis continues to emerge. Requiring the utilities instead to come into the commission on an individual basis for each impact that the state of emergency declaration and its modifications may have would be inefficient for all parties. The crisis is ongoing and its impacts on society and business are constantly evolving, due in part to the continued modifications to the state of emergency declaration, which is currently in its 16th modification. This constantly changing landscape means that the incremental costs associated with this emergency are not fully known and certain at this time, as Mr. Walsh and others mentioned. In particular, and regardless of the financial impact incurred in the first quarter, it is impossible to know at this time the costs that will be incurred as a result of increased bad debt due to an extended period of suspending disconnect, which was ordered by the governor in the 6th modification. The main difference in the utilities form of proposed order expands the time period for a COVID-19 regulatory asset beyond the end date of the governor's state of emergency declaration. I know that others have addressed this difference, but I just wanted to highlight one additional point. Yesterday, the U.S. House of Representatives released the text of its proposed HEROES Act COVID relief bill, which includes a nationwide disconnection moratorium and debt collection restrictions applicable until 120 days after the federal emergency is lifted. While this is still just a proposal, it demonstrates the flexibility needed to capture relevant costs incurred after the date a state of emergency is lifted and illustrates that the utilities will still be impacted far past that date. Others have discussed that a regulatory asset simply sets up an accounting treatment method to capture costs and any relevant offsets and is not an authorization by the Commission that any utility will recover any particular cost. So I won't go over that again in any further detail. Accordingly, Chesapeake respectfully requests the Commission grant staff's motion using the alternative form of order 9588 provided by the utilities. Thank you.
Thank you, Ms. Orr. Is there any other utility representative that wishes to speak? Hearing none.
Chair Winslow. Chair Winslow, this is Dawn Crompton. May I say one more thing?
Go ahead, please.
Thank you, Your Honor. I would just like to note on the retroactive rate-making point that in Washington, D.C., an order was issued in April that allowed costs going back to March 11th, which was the date when the emergency declaration was declared in D.C. And we respectfully believe that this is an important issue for the Commission to promptly decide, but should the Commission consider making the order date effective as of today, we would respectfully request that we would be entitled to brief on this issue, as we think that it is inappropriate to set the order as of today for a regulatory asset recovery. So again, we would like the Commission to promptly decide this issue, but if the Commission is inclined to set the date, the active date for today, we would respectfully request that we would be permitted to submit briefs on this issue. Thank you.
Chairman Winslow, on that point.
Ms. Iori?
Yes, on that point.
Ms. Iori, just give me a second, please.
And I apologize. I'm sorry.
Yeah, no problem whatsoever. Ms. Orr?
Yes.
Lindsay?
Yes. Yes, Chairman.
Is it necessary for us to make a decision with respect to the retroactive rate making today? Would it be permissible for us to make that decision at the time of the actual rate making?
Well, Chairman Winslow, I believe that what is in front of you today is staff's motion, and that motion requested that the time period begin on March 24th, I believe, off the top of my head. So I would say that is the request on the table in front of you today.
Chair Winslow, this is
okay. Thank you.
Chair Winslow, this is Bill O'Brien. Can I have a quick minute?
No, not right now. Just hold on a second, please, Bill. I'm sorry. Ms. Iori, I'm going to let Mr. Walsh go next because I think it's his turn, and then obviously I'm going to let you have some further comments, okay?
Thank you, Chair Winslow.
My pleasure. Mr. Walsh?
Thank you, Chairman Winslow and Commissioners. I would like to just address first the alternative order. Staff can accept the addition of the 30 days after as the end date for the time period, and does so for the reasons that the utility stated. However, in that same ordering paragraph number 1, staff does not agree with the inclusion of that last part, which states, quote, but may include additional costs resulting from the governor's executive order, such as prohibiting shutoffs and collections that may extend beyond this time period. And I say so because that is open-ended. The last clause in there that may extend beyond this time period, that's too indefinite for purposes of this order. I think allowing the 30 days after is certainly a proper and, dare I say, generous concession, particularly where you have, for most of these utilities, you have the monthly billing. So I would believe that they would know several of these, or most of the conditions anyway, within 30 days. And if they find for some reason that there is a good reason to petition to amend this order extending beyond that, they can certainly do so. The order says so, but 30 days after is acceptable. The last part is not, because it just leaves open too many things, not to mention the fact that it mentions additional costs resulting from the governor's executive order, and this time period is based upon the 6th modification. So first part, yes. Second part, absolutely not. And then as to ordering paragraph number 3, as Ms. Slayton addressed, the inclusion of the costs that will be recoverable, they struck the language whether the costs are recoverable. Whether the costs are recoverable is the proper terminology, because that is exactly what the order says. That's the only way it can be addressed in a rate case. If you were to include the provision, the costs that will be recoverable, then you would, by necessity, have to say the costs that will or will not be recoverable. But that states the same thing as whether the costs are recoverable. So I think it's cleaner and more in line with commission orders to state whether the costs are recoverable. I don't have anything further to, I think Mr. Slater's comments were addressed by the utilities, so I will stop there and not risk being redundant on any of those responses.
Mr. Walsh, how about Mr. O'Connor's statement that they're working on a quarterly billing rather than a monthly billing?
Well, then they could put in there, in that quarterly report, assuming this is going to go on for a while, not an assumption anyone likes to make, but they would have historic data on those, and they could certainly put those in there, and then if and when that regulatory asset should become part of a future rate case, those numbers can be assessed and determined at that time. But I think it's important to maintain the time period as reflecting March 24th and then ending 30 days after the lifting of the state of emergency as the time period.
Well, how about what Ms. Orr says with respect to the federal government passing legislation that would perhaps extend the period longer than what you have put in the order? In other words, the actual practical effect on the utilities would, despite the fact that the governor of Delaware would suspend the emergency order, the federal government might pass legislation that would essentially do the same thing or have the same effect upon the utilities as the emergency order.
Well, Chairman, if that were to occur, I think ordering paragraph number 5 would cover that situation. And it states that requests for additional commission actions related to the state of emergency shall be filed in this docket. I think that could be addressed later.
Okay, so if there's uncertainty or if there's a change in circumstances, that paragraph 5 would permit a utility to make that application for consideration, the commission, and obviously input from DPA and others. Okay, that makes sense. Now, Ms. Iori, I think you probably have a few words you want to say.
Thank you, Chairman Winslow and Commissioners. I simply want to respond to Ms. Kurtz-Crompton's offer to brief the issue. I don't think that's necessary. In the emblem order, which Mr. Stakes mentioned to you, we made that same argument, and the commission told us that we could make that argument when they come in their next rate case, which we will. So I think that whatever date you started from, will be argued in the next rate case. We certainly intend the next time Artesian comes in, because that's when they'll request recovery of that particular regulatory asset, that if we lose on including it in rates, we will be appealing the retroactive rate-making part of it. So I don't think in terms of, you can decide whatever date you're going to make it effective from in this order. And if it happens to be March 24th, the DPA will save that as an appeal issue for the next rate case. So I don't think any briefing needs to be done at this time.
Okay, thank you very much.
I think Mr. Slater may have a few comments.
Mr. Chairman, if I may, we've heard from all of the utilities, and as I started off my comments saying, I feel this is a bit of a gang up because they all support staff's motion, but then all made argument. The utilities talk about what other states are doing. Well, and specifically surrounding states. These states are engaged in cost-cutting measures to weather the storm, but none of our utilities have suggested that or even proffered that. Delmarva says impact. I have to ask you, what's the impact? They haven't provided you, no utility has provided you a single impact or data point to show what their costs are in any measurable way or how it impacts their financial integrity. They talk about, well, you can use business judgment. I'm willing to bet that none of us want to go back to the IMU battery failures all over again. But I think that's exactly where we're going to end up, because we know that business judgment is always going to be in favor of the utilities. And then, of course, Delmarva says there's a significant financial impact. That's just not true. They have no data. They can't sit here and say there's significant financial impact when they literally not provided a single shred of data. And then they say that there's a negative outlook from S&P for all the utilities nationwide. So let me tell you about the utilities in Delaware. I did research. I can't find a single negative outlook for any of the utilities in Delaware. And I go back to what S&P said in that same article that Ms. Slayton is referring to. They said the industry has levers, that the industry can reduce capital spending and dividends, much to the chagrin of Mr. Spate. But none of our utilities have done that. And it indicates that they could, on a temporary basis, reduce capital spending by 40% and maintain safe operations. But the utilities didn't mention any of that to you either. They say extraordinary cost. Again, I have to go back to what cost, because, again, it sounds like a broken record. They provided you with no data. And let me talk about Artesian. Artesian says that this isn't one-sided. That's just totally ridiculous. This is totally one-sided towards the utilities. And regarding other states, again, because Mr. State brought this up, I remember being told as a child, if a friend jumps off a bridge, are you going to jump off too? I sure as hell hope not. But here's the other thing. Under the Financial Accounting Standards Board, the commission has to find that it is likely that the costs will be recovered. Likely. And then Mr. Spate took aim at chastise and used the word inform. Well, let me tell you, on that call, I don't appreciate being talked down to like a child. They specifically said that this wasn't the time for questions, and they never responded to a single question that would have educated the DPA and this commission in order to make this decision. Nothing. Not all discretionary projects are necessary. And again, S&P said that. And for Chesapeake, let me go to the U.S. House bill, which the Senate said won't move. So that should end that debate right there. As you know, you can't predict what a legislature will do. And I posit it's even more difficult to tell what Congress is going to do. And so with that, I implore you to deny this, because it is absolutely one-sided and totally towards the utilities and their shareholders. Thank you.
Thank you very much, Mr. Slater. Commissioners, do you have any questions? Oh, no, I apologize. One more thing. Mr. O'Brien, I saved you for last because you represent us, correct?
That's right, Chair Winslow. It's Bill O'Brien. And the director had asked me to make sure that the commission knows that I've been assigned commission counsel in this matter. So I'm here to respond to any legal questions you might have for your own counsel. The only other thing I wanted to say was that if you are inclined to adopt the public advocate's view on retroactive rate making, then I would like to provide some feedback on that. But if you're not, let's just move forward on that, and I'll stop talking. Thank you.
Thank you, Mr. O'Brien. Commissioners, do you have any questions of the parties, or do you have any questions of Mr. O'Brien?
Yes, this is Kim Drexler, Commissioner Drexler. My question is for Mr. O'Brien, and I would like you to answer the question regarding the March 24th date and retroactive rate making, please.
Thank you, Commissioner Drexler. Again, this is Bill O'Brien. So to issue an accounting order that allows or authorizes a utility deferred accounting treatment, meaning authorizing them to set up a regulatory asset for an expense that was incurred prior to the accounting order, that is not impermissible retroactive rate making. As you know, commissions set rates on a prospective basis. It's a legislative function, and as such, it's done on a prospective basis moving forward. So when you set a rate, it's for a future time period. What commissions cannot do is then at the same time say, and oh, by the way, the rate over the last year that the utility's been charging was incorrect. So we're going to go ahead and make up for that incorrect rate now moving forward. That's impermissible retroactive rate making. This is not, and I'll give you just a very quick example that'll hopefully show that. The classic example of regulatory asset treatment for an extraordinary, non-recurring expense is when we go through a hurricane. And after that hurricane, a utility comes in for an accounting order so that they can set up a regulatory asset for the restoration costs that are caused by that extraordinary event. Certainly, a commission is not going to say, oh, by the way, you can set up that reg asset, but the last month's worth of restoration efforts are not going to be permitted in that reg asset. It would almost gut the whole purpose for allowing deferred accounting if that were the case. So, being the lawyer who might be defending this order at some point, I do feel it necessary that I advise you that it would be a difficult road to hoe to support a finding from a legal perspective that setting up a reg asset for expenses that occur prior to the accounting order is impermissible retroactive rate making. So I would simply advise that you, if you want to put parameters around it, you can do that. Certainly utilities are not legally entitled to recover non-recurring expenses. This is an exception. So you can put parameters around it, but I would not call it impermissible retroactive rate making to allow for expenses prior to the date of issuance of the accounting order. And that's all. Thank you.
Thank you.
Commissioner Drexler, any another question?
No, thank you.
I have.
Are there any other questions?
Yeah, this is Commissioner Karia. I wanted to just pass on one comment and a question to our public advocate. See, going or giving the dividend is again a past period earning. So if a utility declared a dividend in April, that would be for January, February, March, and it does not reflect any expenses that occurred in the last 2 weeks of March or last 1 week of March after March 24th, April, May, June, and onwards. So those January, February, March earnings maybe, I don't know that, but maybe normal earnings, except one last week of emergency. And also, many times companies declare the dividend taking money out of the reserve account, because they have to show good standing to their shareholders who have put their money to the risk. And not paying the dividend is like a negative messaging. If the utility is paying the dividend, maybe the utility will be able to get capital and or the bond, like borrowing and or the equity capital. And you want your utilities to get money from the capital market to build a substation, $50 million, or to build a secondly 69 kV line around Dover. So it is giving dividends and being financially strong messaging is very good for the ratepayers, because that way the utilities will be able to get capital, both borrowing and the equity, get the financing more at a better rate, and ultimately ratepayers will be paying little less money in the rate. So paying dividend or making a big foot forward in financial markets is, to me, if Delmarva did, as you have given an example, or if Chesapeake has done, as there is an example in the package, to me, that is a plus for the ratepayers, rather than, to me, that's not a minus. So I just wanted to pass it on to you, because then my question is, how would you feel if the rates go up 6 or 12 months from now, because these utilities have to borrow money and or equity at a higher cost? How would you feel? And that is my opinion or thinking.
Yeah. So, Commissioner Correa, if I may respond. So, part of my comments is that you heard the utility say that they are seeing a negative rating nationally. That's just not true for the utilities here in Delaware. S&P, Standard & Poor's, is actually the one that suggested that you could withhold dividends, and it was actually General Motors that just did that for cash straps. I think that trying to predict the future is very difficult. I don't expect given where the market is and interest rates, that equity is a problem for any of these utilities. I don't think we heard that today, and I don't expect we'll be hearing that anytime in the next 12 months. I do expect more rate increases, just kind of as a nature, some utilities come in about every year and a half. But I don't, given the current state of the market, I don't think that there's a problem going out and finding equity. In fact, I was reading an article yesterday from Moody's that said just that. But thank you.
Thank you.
Commissioners, I'm going to make a motion.
Mr. Chair,
Yes,
this
sir.
is Commissioner Gray, please. I have a few
Yes.
questions.
Yeah, once we have, you have questions of the parties?
Well, I want to know if there's some party to this matter who expects any revenues from the stimulus or recovery funds, and if yes, would this mitigate the COVID financial impact?
That would be an offset, I believe. Who are you going to, Commissioner Gray,
Well,
ask somebody the questions, please.
There was.
I can answer that.
I'll take Mr. Slater's crack at that.
All right. So that would be an offset, and as the parameters that we had mentioned that we would like to see, I think that the federal stimulus is just one of those parameters. But I do believe that would be an offset, as well as any beneficial tax treatments from the CARES Act, and there's a variety of other potential offsets. Our point was to make it clear that those offsets need to be specified, and that we need to ask for savings measures, because it didn't seem like the utilities were going to do that on their own. But I see that the federal stimulus would count.
All right, Mr. Chair, I have two more short questions, please.
Yes, sir.
What if this COVID becomes normal operations and not an extraordinary non-recurring event? How should we then treat associated costs?
Chairman.
Well, I'm not sure who you're asking that.
I can take a crack at that. If it becomes normal recurring costs going forward, it will be part of their revenue requirement when they come in for rate cases and when the commission approves rates. Right now, the way that these costs are accounted for in the regulatory calculus is that the company comes in with a normalized level of, say, equipment expense, and that would encompass the equipment that they have incurred over, and I'm sorry, that whatever that noise is very distracting to me. I apologize for my OCD. What the utilities do now is say, let's use uncollectibles as an example. They will come in and they will have what is called a normalized level of expenses, and that is based over what they've incurred over the last however many years it's been, since they had a rate case. You figure, let's use Delmarva as an example. I think they generally come in every 2.5, 3 years. So their normalization period is 3 years. So you calculate what the average is, and that, assuming that there are no arguments about what went into it, that is what their amount that is included in their revenue requirements going forward. So if those amounts increase as a result of COVID, and that is expected to continue, that will be accounted for in the rate-making process.
Okay, Ms. Ari, thank you very much. But I was just getting to the point that we won't have an unlimited extension to this regulatory asset if this turns out not to be extraordinary and non-reoccurring.
I'm sorry, I'm not following.
we're establishing date ranges for the regulatory asset and capturing of costs based on an extraordinary non-reoccurring event. And I guess what I'm trying to determine is if this becomes recurring and non-extraordinary, do we continue to extend the regulatory asset or do we fold it into rate making?
No, it gets folded into rate making. I'm sorry if I was unclear.
Okay, that's fine. I have one last question, short question, Mr. Chair. I think we do need some qualifying criteria and quantifiable boundaries for what is or is not allowed. And I'm just curious, can these be both defined and administered later when we start to review this regulatory asset and recovery? I'm asking Mr. Slater this question, I believe.
No, I appreciate the question. I would say you set those parameters now. That is my response, because I don't think the parameters are very well set, and so I think the parameters or guardrails, whatever you want to call them, need to be set now, because otherwise, like I've said before, it is very, very difficult for staff or the DPA to challenge any costs once the utility has already put them in, because the business judgment rule pretty much is going to guarantee those costs. So without having to go into a forensic detail, I would say you set those parameters now.
And can I ask Mr. O'Brien to weigh in with an answer on that same question?
I don't think that's a legal question.
Well, the question is, the question, Mr. Chair, is can we, at the time we deliberate allowance for the regulatory asset costs, define what is allowed to be reimbursed versus what is not?
Commissioner Gray, this is Marisa Slayton. May I take a swing at that?
No, I think if he's going to ask a legal question, he can answer
No.
He wants to. I thought he was answering to Mr. O'Brien.
Yeah, I'm asking Mr. O'Brien from the commission's perspective. Yes.
Commissioner Gray, you'll have a chance at the rate case to determine what properly qualifies as the type of expense that you allowed in this accounting order. So clearly, if it's not an incremental expense brought on by this pandemic, then you would be legally supportable in denying that as part of the reg asset. But you would not, but in my opinion, you would not be able to simply start over and say, we've decided now that we're not going to allow recovery of incremental pandemic-related expenses because they're non-recurring expenses. You wouldn't be able to say that because you've already said that we're making an exception to the prohibition of recovery on non-recurring expenses because we're allowing this reg asset. So hopefully that answers your question.
Yeah, I think it gives me an impression what I was looking for. Mr. Chair, I have no further questions. Thank you.
Thank you, Commissioner Gray. I move that the state's motion be approved with the exception that the first argument made by Ms. Slayton with respect to changing the motion be accepted and the second one not be accepted. And I would like to, if I could, to set the parameters like Mr. Slater says, but the problem is that, as he also noted, that we don't know what the future is, and we don't really have I don't believe in front of us really too many facts to set the boundaries that he's requesting that we set. So I declined to try to set the parameters, and I would like to just hear those arguments when the case comes before us. So I don't know if we have a second to the motion or not, but.
Mr. Chairman.
This is Commissioner Karia. I second it.
Hold it. Commissioners, would you mind? This is Raj calling from the office. I have the commission secretary with quizzical looks on our face. We need to actually, before you take up the motion, just clarify the motion. So you took staff's order.
Staff's order was to change number one that Ms. Slayton argued.
Hold on.
The 30 days.
So 30 days is in, okay. And then?
That's it.
Okay, so the only change to the staff order is that the 30 days after on ordering paragraph 1, correct?
Correct.
That's correct.
Okay, thank you.
However, as noted by Mr. O'Brien, I believe, or Mr. Walsh, paragraph 5 does give all of the parties some sort of flexibility, so that doesn't need to be included within any motion. There's been a second. Is there any discussion on the motion? Hearing that there's no discussion, all those in favor, please signify by saying aye. Aye.
Aye.
Aye.
Aye.
All those opposed? Is there anybody abstention? Any, not voting? The motion carries.
Point of order, Chair Winslow, this is Bill O'Brien. I apologize if I just missed it, but I just wanted to make sure, was there a second to the motion?
Yes,
Commissioner Correa, I
Commissioner
believe.
Karia, I second it, yes.
Thank you very much. That's all.
Number 6 on the calendar is in the matter of the application of Delmarva Power and Light Company for approval of a program for plug-in vehicle charging. We have staff memo and proposed order 9593. And I guess, is it Ms. Kurtz-Crompton?
Yes, Your Honor, I'll be happy to take this one.
Okay.
Again, this is Dawn Kurtz-Crompton appearing on behalf of Delmarva Power. And the commission in front of you today has for your consideration Order 9593, which pertains to Delmarva's March 20, 2020 application requesting approval of tariff changes to offer a new service classification for plug-in vehicle and a plug-in vehicle green rider. This application merely reflects the decisions made in docket 17-1094 as approved on June 4th, 2019 in Order 9357. Delmarva's March application also removes references to service classifications, residential time of use, and residential time of use super off-peak, as these two time of use classifications are obsolete and are no longer offered to our customers. Order 9593, if entered, will allow Delmarva to update the tariff to reflect approved service classifications for plug-in vehicles and a new plug-in vehicle green rider, which, as set forth in the staff memo in this docket, which was prepared by staff analyst Patricia Gannon, will satisfy the requirements of the settlement, will offer new options to plug-in vehicle customers, and will enable Delmarva to comply with the settlement requirements. I would like to thank staff for preparing the memorandum and proposed order, and for allowing Delmarva the opportunity to comment. Delmarva is in agreement with the form of order that has been presented to you today, and respectfully requests that the Commission approve order number 9593 as submitted. Thank you.
Thank you, Ms. Orr. Ms. Iori?
Thank you, Chairman Winslow and Commissioners. The public advocate has reviewed the tariff filing and the proposed form of order and supports the proposed form of order for your entry. Thank you.
Thank you, ma'am. Mr. O'Brien, is this you?
Chairman, Tom Walsh on this one.
Okay. Please proceed.
Staff supports entry of this order. Ms. Crompton's recitation was accurate, and I should also thank Ms. Gannon for her work in pulling all this together. With that, staff supports entry of Order 9593.
Is there anyone else there present that needs to speak on this matter? Do any commissioners have any questions of the parties? Commissioner Drexler?
Yes. Move we approve order number 9593 as presented.
Commissioner Gray, second.
Okay. Is there any discussion on the motion? Hearing none, all those in favor signify by saying aye. Aye.
Aye.
Are there any opposed? Any abstentions? The motion carries. Thank you very much, everyone. There is nothing on the hearing schedule for today's meeting. Is there anyone on the telephone that wishes to make public comment? Dr. Brewer, it's your turn.
Thank you, Mr. Chairman. Is Amy Wally from staff on the call? Amy?
Hello?
Dr. Brewer?
That phone is muted.
You on mute?
I don't know, but
I am. I was trying to reach there. Sorry.
No problem.
At this point, it's Amy Wally from staff. Are you on the call, Amy?
Yes, I'm on the call.
Okay, go ahead. Do your presentation, please.
Okay. Thank you. Commissioners, we have a memorandum before you today for the commission to verbally approve the one-year contract renewal for the technical monitoring consultant services for SOS. Liberty Consulting Group has submitted a letter to exercise their option to renew its contract and service to the commission for the fall of 2020 and of 2021. The technical monitoring consultant assists the commission and staff in understanding market conditions and the standard office service bids. Its letter describes the tasks that will be performed are the same as last year, with a budget of $56,990 to be billed on an hourly not-to-exceed basis. The bid amount is stated for the 2 bid days. So again, today we just need for you, the commission, to please verbally approve the one-year contract renewal. Thank you.
Thank you, Ms. Wiley. I appreciate your presentation. Do commissioners have any questions of Ms. Wiley while we have her here?
I move that we adopt the, Mr. Chair, I'd like to make the motion that we adopt the next one-year extension as submitted, proposed.
This is Commissioner
Conway,
Geisler.
second.
Is there a second?
Commissioner Conway, seconds.
Is there any discussion? All those in favor signify by saying aye.
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 Are there any opposed? Any abstentions? The motion carries. Thank you, Ms. Wiley.
Thank you very much.
Thank you, Mr. Chairman. Just to announce that there is an evidentiary hearing in PSC docket number 19-0615, Suez Water Delaware Inc. rate increase. That is on Wednesday, June 3rd, 2020 at 1 p.m. before you in this, I guess it will still be a teleconference probably. And the next commission meeting is next week on May 20. It's a single item. It's the executive session in regulation docket 56. It's should be needed. And the next regular meeting after that is on June 3rd. With that, I have no other comments. Thank you, Mr. Commissioner and Chairman.
Dr. Brewer, what time? I forget. What time is it on the 20th?
Oh, it's on 1 o'clock. I'm sorry. 1 o'clock on the 20th and 1 o'clock on June 3rd also.
Okay.
That's all I have, Mr. Chairman.
Commissioner Denny? Yeah, thank you, Dr. Raj. Dr. Raj. Commissioner, anything else? Anything else, Commissioner?
No.
We are adjourned. Thank you all very much.